Yes, for a look across the housing and real estate market. I'm joined by Erin Sykes, founder of Sykes Properties. Erin, thank you so much for joining us today. All right, let's talk about the state of the housing market. We just had data out yesterday showing that housing starts were strong, better than expected. You had this 5-month high there. Building permits a little lower than expected, and confidence remains low. How do you reconcile the disconnect between those?
Yeah, so the positive data yesterday was mainly driven by the multifamily market, and that is apartment complexes targeted for the rental inventory. So that's where we're releasing things go gangbusters because people simply can't afford the single family homes anymore. That said, we have seen a pullback in the last 2 weeks. We've hovered about 6.5% in the 30-year mortgage rate. Now, that's not where people want it to be, but I think that we've finally kind of gotten over this hump of expectations and what the long-term future holds. So I think that we're going to see a cut in September. Whether or not that cut leads to lower mortgage rates is yet to be determined. But I think people are finally realizing that, 6.5% in the long term, as long as you get a decent price on the house, your time horizon for holding that single family property, your primary residence, is 5-10 years plus. And they're doing the math, and that's still better than renting. So I think that we've digested a lot of the information. It's not a wonderful market on either side. We're still very bifurcated depending on your geography, but it's a tolerable market.
Okay. I hear it in your voice. I hear the tension because it feels like, been covering the challenges in the housing market for, it feels like some years now. So when you think about the improving part of the equation, for instance, you note that we're seeing price declines in 50% of the country. And when I say improving, that's for obviously favorable to the buyer. Do you view that as the start of a shift of improved affordability, especially when you think about single family homes?
Yeah, so we're seeing those price improvements in the South and in the West, whereas in the Midwest and in the Northeast, we're seeing prices hold steady. So whether or not, which side of the fence you're on really depends on your geography. I don't really see prices improving in the Northeast anytime soon. I think that for better or worse, if we see a mortgage rate decline of a sizable magnitude, we're actually going to see those prices in areas like the Northeast and the Midwest go up again. So that's why you can't catch a falling knife. You really just have to be in the market. We're talking about primary homeowners versus investors. Investors need to be in and out quickly. This is a terribly challenging market for them because also the build costs are high. Now, for the primary homeowner, as we mentioned earlier, your time horizon is much longer. So you have, I would say, a better than a 75% chance of your home appreciating over the next 10 years. So you're either going to be paying somebody else's mortgage as a renter, or you're going to continue to live at home, which we all know is not ideal, or you're going to buy into this market and you might not get the home run that your parents got, but you at least will be building equity in a property.
Well, some would argue in the Northeast that, when you think about the dynamics here, that it doesn't even make sense to own, like, for instance, in a place like New York City. Where do you see the most opportunity for both buyers and sellers right now?
Yeah, New York is an entity unto itself. And actually, the housing market in New York City functions more as a safe deposit box than it does an actual value appreciation. A lot of people just like to diversify their portfolio by holding a property in Manhattan. But no, they're not going to make those huge returns that we see in other areas. And generally speaking, you don't see large returns on condo purchases overall, no matter where you are based. You normally see appreciation in a single family house, which is why that's been, the core of the American dream for, decades. I think that, if we look at areas like Florida, that's been particularly challenging, particularly in the condo market again, for buyers. And that's because time of the year. We're in August. We're starting hurricane season. That increases insurance rates, and insurance has already been a challenge in the Southeast.
Yeah.
So you have literal headwinds down there, as well as increasing inventory. We're about 50% up on inventory alone in areas of Florida. But again, it's bifurcated. There are some properties that fly off the shelf, and then there are others that are sitting for 300 to 600 days. So as a buyer or as an agent recommending properties to buyers, I think you've got an opportunity to go in and lowball in some of these situations. And what's weird is we're not seeing people do that. We're just seeing everybody sit on the sidelines like they're literally frozen, and they can't make a decision, which I think is actually the biggest danger in this market, is just sitting and doing nothing.
Okay. All right. Thank you so much, Erin. Great perspective today and a great analysis of the state of the housing market. That's Erin Sykes, founder of Sykes Properties. Appreciate it.